Today, I'm just going to show you inflation rate, myth bust, the fact that inflation rate going up has to have gold going up.
We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers.
Okay, guys, welcome to another episode of Talking Trades with myself, Kevin Wadsworth, and my business partner and friend, Patrick Karim from Northstar Badcharts.com. And we're here to talk about gold and its link to inflation. Gold does not necessarily track inflation, or if it does, it's not in the way that you're thinking. So let's dive into that with what Pat's going to show us now.
So, guys, this often you see that there. I see it on social media. Oh, inflation is going up. How come gold's not going up? It's stagnating, or inflation is going down and then gold's going up and people aren't talking about it. Then they say, well, something else. So the best thing you could do amidst all that noise, instead of trying to trade off these narratives or, like gold protects you against inflation, all that stuff, all you have to do, guys, is just pop up a chart, look at reality, assess the probabilities of gold going up depending on what happens to the inflation rate. And then you'll have a better assessment of what it's actually trying to do, right? Of course, it doesn't always, it's not, I'll show you like in the chart that's going to show, I'm going to show my screen in a few moments there. It doesn't always have to reproduce in the way it did before, but at least you'll have the objective truth of, that's how it's behaved most of the time in the past. And with no further ado, guys, I don't think there's anything better than a chart to really crystallize what we're talking about. So here I have, and I know in the 1970s it behaved in a different way, but I'm going to focus on the recent path. So since let's say the 1990s, mid 1990s, here in the top pane, I have inflation rate. So that's just a year over year monthly inflation rate. So here you have inflation rate going up and up and up and up. And then goodness, gold's supposed to protect me against inflation rate going up, right? Because here at the bottom pane, guys, I have the gold chart and gold is just going down and down and down and down as inflation is going up. So right there, that's already like, if anybody's looking at the chart, they should say, okay, that's not what gold tracks, right? It's not tracking inflation going up. It could be part of it. That is a subject for another discussion. We know gold tracks purchasing power, which is the US dollar adjusted for inflation, right? But I'm not going to deep dive in that today. Today, I'm just going to show you inflation rate, myth bust, the fact that inflation rate going up has to have gold going up. So here it is. And guys, look, when the rising trend line here for inflation rate, once inflation rate breaks down that rising trend line, that upwards momentum, guess what gold starts doing? It starts going up, and it's going up and up as inflation is going down and sideways. Gold just keeps going up and up and up. Here you have another upcycle inflation rate. Inflation rate breaks down, and look what happens. Bottom for gold in 2006. Gold goes up and up and up and up and up. Here, inflation rate plummets. It's the end. It's deflation. This is a GFC, guys. Everything's going down the drain. And look what happens here as inflation rate continues going down. That's the bottom for gold. Gold kept going up before inflation bottom and started going up. And here you have another rise up for gold and inflation together. But look, once inflation starts breaking down, gold did top. And I'll show you one more. So here's 1, twice, 3. The fourth time it did not do it, right? It doesn't mean because it did 3 times. Now it's 3 out of 4. It behaved in that way. Here's the 5th time. Inflation rate going up, up, up. Gold's in a bear market. It's going nowhere. But look at that. As soon as inflation broke down here, gold bottomed. So now you have 4 times out of 5, gold bottoms when inflation rate breaks down. And see inflation rate going down, 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 gold goes up. And it just happened here that when inflation started going back up again, gold had already priced that in. That's another way to see it. You always got to think, if I'm hearing the news, but there's professionals, there's market analysts, they're pricing that stuff in ahead of time, right? They have information that you probably don't have. They have the research, all that. So they're ahead of the curve, right? When you hear the news, like buy the rumor, sell the news. Well, it kind of fits into this, right? Once you hear about high inflation, especially here. So here was the most recent run. Everybody remembers, right? Inflation's at all-time highs. But look, gold was going sideways all that period. Gold was actually going down right here. So now, but inflation now is breaking down. was breaking down from that rise. And people say, goodness, well, inflation's done, gold's going to go down for count. But if you've been looking at the charts, you know that a lot of the times, most of the times, gold loves bottoming when inflation rate breaks down. So let's see what happens. Here I have my replay bar, and I'm just going to play it. And here we go. I'm playing. Inflation rate goes down, 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 down. And look what gold did. It went up, 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 up. So now we got, here's the evidence, the probabilities. 1, 2, 3, 4, 5 times. So four times out of 5, gold goes up and bottoms once inflation rate breaks down. So this is how I present objective information in front of you. It has to bust the myth that gold tracks inflation. It tracks it, but inversely to what you think, right? It actually, if it sniffs out that there's going to be another inflation run, another sequence of U.S. purchasing power destruction, gold will go up before it even materializes, 3 months before, 6 months before. The aggregate of market participants, the one moving all this big money, they'll move the price ahead of time. So when the crowd hears about these super high inflation rates where the threshold of noticeability is there, oh my goodness, everything's up. And then you start hearing about it in the news, you have 8%, 9% inflation. And then you say, oh, I got to protect myself. Well, guys, you had to protect yourself ahead of time. You had to track the gold price when gold was breaking out, right? So trading off just the inflation rate and thinking that's how you should go in the gold chart or not is not the way to do it, guys, right? And always go to charts. They'll show you the truth. Whenever somebody says something, you got to look at the objective evidence. You got to look at the charts and say, goodness, that doesn't add up there. And I'll tell you one more thing. And this will be a great subject for a discussion, is if ever you have charts that don't seem to match up with correlation with another chart's price movement, then you got to ask yourself, and you always say, oh, there has to be a catch up. Maybe you're not looking at the good evidence, right? Maybe you're not looking at the good macro drivers that's driving the price of the instrument. You think that has to do a catch up move, right? Always look at the charts. And that's the best advice I could have for you guys.
Fantastic stuff, Pat. We always like to bust a few myths here, and I think that was 5 times out of 6 on that chart that you showed, actually. So that was really good, strong evidence there. You're counting up all the occasions. I'm pretty sure that was 5 out of 6. That's a pretty good evidence rate for that particular piece of evidence that you're showing there. There's never 100% guarantees with technical analysis, but what TAE does for us is it helps us assess the probabilities of what is coming next when you're trying to forecast anything in the future, whether it's the price of gold, the price of silver, the stock markets, or anything. It's about weighing the evidence and assessing the probabilities. Hope you enjoyed all of that. It's great to have you watching us here at Talking Trades. Do join us next week for more and subscribe for more content. Bye-bye for now.